Let's begin by understanding what a tax return is in Malaysia. A tax return is a formal statement that you, as a taxpayer, submit to the Lembaga Hasil Dalam Negeri, also known as LHDN or IRB. This document declares your income, any tax reliefs and rebates you're claiming, and the taxes you've already paid. It's the foundation for how your tax is assessed under Malaysia's self-assessment system. Filing a tax return isn't optional, it's a legal requirement for all chargeable taxpayers as outlined in the Income Tax Act 1967. Whether you're an employee, a business owner, or part of a company, understanding this process is crucial for staying compliant. Filing your tax return is not just a formality, it's a legal obligation. The Income Tax Act 1967 makes it mandatory for anyone with chargeable income to submit a tax return. This ensures that everyone pays their fair share and that the government has accurate records for tax assessment. If you earn an income in Malaysia, you're required to file, regardless of whether you think you owe tax or not. This helps maintain transparency and accountability in the country's tax system, and it's an important step in fulfilling your civic duties as a resident or business operator. Malaysia's tax system recognizes different types of taxpayers, and each has its own specific tax return form. For example, if you're an individual without business income, you'll use Form B. If you run a business or practice a profession, Form B is for you. Companies including limited liability partnerships file using Form C. Partnerships use Form P, which details profit allocations to partners, though the partnership itself doesn't pay tax. Expatriates and non-residents have Forms M or ME, while trusts, cooperatives, and associations use Form TP or e-filing. Knowing which form applies to you is the first step in filing correctly. Let's look closer at Form B. This form is designed for resident individuals who do not have business income. If you're a salaried employee or earn income from sources other than a business, this is the form you'll use. It's straightforward and focuses on employment income, investment income, and any eligible reliefs or deductions you can claim. Filing Form BE ensures that your tax is assessed correctly based on your non-business income, and it's the most commonly used form for employees across Malaysia. If you're running a business, practicing a profession, or earning income from a vocation, Form B is your go-to tax return. This form is tailored for individuals who have business income, and it requires you to declare not just your earnings, but also your business expenses, capital allowances, and other relevant details. Filing Form B can be a bit more complex, as you'll need to provide supporting documents like business accounts and receipts for deduction. It's essential to keep accurate records throughout the year to make this process smoother. Companies and limited liability partnerships, LLPs, must file their tax returns using Form C. This form is specifically structured for corporate entities, capturing all sources of income, business expenses, and allowable deductions. The company's financial year-end determines the filing deadline, and accurate reporting is critical to avoid penalties. Companies must also ensure that all supporting documents, such as audited financial statements, are ready for submission. Proper filing helps maintain compliance and supports the company's financial integrity. Partnerships in Malaysia file their returns using Form P. It's important to note that the partnership itself doesn't pay tax. Instead, Form P is used to report the partnership's profit allocations to each partner. Each partner then declares their share of the profits in their individual tax returns and pays tax accordingly. This system ensures transparency and proper tax distribution among partners, making it essential for partnerships to maintain clear and accurate records of profit sharing. Non-resident individuals, such as expatriates, use Form M or ME for their tax returns. Other entities like trusts, cooperatives, and associations have their own forms, such as Form TP or the e-filing system. Each form is tailored to the specific needs and legal requirements of these groups. It's important for expatriates and organizations to understand which form applies to them to ensure compliance and avoid unnecessary complications during tax season. Meeting tax filing deadlines is crucial to avoid penalties. For individuals using e-filing, the deadline is typically 30 April following the assessment year. Companies have a bit more time, with a deadline set at 7 months after the end of their financial year. If you're filing manually with paper forms, the deadline is usually a bit earlier. Staying aware of these dates helps you plan ahead, gather necessary documents, and ensure your tax return is submitted on time. If you have taxable income in Malaysia, you must register as a taxpayer with LHDN. This registration is the first step before you can file your tax return. It ensures that you have a tax reference number and are recognized in the tax system. Registration is mandatory for all individuals and entities with chargeable income, and it's a straightforward process that can often be completed online. Once registered, you'll be able to access the necessary forms and e-filing services. Preparing your tax return, it's important to gather all relevant supporting documents. These may include your salary slips, EA form, bank interest statements, receipts for any reliefs or deductions you're claiming, and business accounts if you're filing as a business owner or company. Having these documents ready not only makes the filing process smoother, but also ensures you can substantiate your claims if your return is audited by LHDN. Keeping organized records is key. Every tax return begins with your personal or entity information. This includes your name, identification card or company number, address, and tax reference number. Providing accurate details is essential, as any errors can delay processing or lead to complications. For companies, this section also includes corporate registration details. Double-checking this information before submission helps ensure your return is processed smoothly and without unnecessary delay. Next section of your tax return is all about declaring your income. This includes employment income, business or professional income, and any income from dividends, interest, rental, or other investments. It's important to report all sources of income, even if tax has already been deducted at source. Accurate income declaration ensures your tax liability is calculated correctly and helps you avoid issues with LHDN in the future. After declaring your income, you can make adjustments and claim deductions. This includes business expenses, capital allowances, approved donations, and personal reliefs. Deductions reduce your chargeable income, which in turn lowers your tax payable. It's important to keep receipts and records for all deductions claimed, as you may need to provide evidence if your return is reviewed or audited by LHDN. Once you've declared your income and claimed all eligible deductions, it's time to compute your tax. This involves calculating your chargeable income and determining the tax payable after accounting for reliefs, rebates, and deductions. The tax computation section is crucial, as it directly affects how much tax you owe or how much refund you might receive. Double-check your calculations to ensure accuracy and avoid underpayment or overpayment. Final section of your tax return is the declaration. Here you confirm that all information provided is accurate and complete. You'll need to sign the form and indicate the submission date. This declaration is a legal statement, so it's important to review your return carefully before submitting. Once submitted, your return becomes the basis for your tax assessment, and any errors can have legal or financial consequences. Malaysia encourages taxpayers to use e-filing, the online method for submitting tax returns. Accessible via the LHDN's official MyTax portal, e-filing offers faster processing, immediate calculation of tax payable, and instant acknowledgement of your submission. It's user-friendly and reduces the risk of errors. Most individuals and companies now prefer e-filing for its convenience and efficiency, making tax season much less stressful. Those without internet access or who prefer traditional methods, manual filing is still an option. This involves submitting paper forms at LHDN counters. While it's slower and may require more effort, manual filing ensures that everyone can fulfill their tax obligations regardless of digital access. Just remember, the deadline for manual filing is usually earlier than for e-filing, so plan accordingly. Malaysia operates on a self-assessment system, meaning taxpayers are responsible for computing their own tax liability based on the income they declare. The LHDN may verify your return through audits or reviews, but your assessment is considered final unless you raise an objection. This system places the responsibility on you to be accurate and honest in your reporting, making good record-keeping and careful calculation essential. Failing to file your tax return on time or not filing at all can result in significant penalties. Late submission of a return can lead to fines ranging from RM200 to RM1000 for individuals. If you pay your tax late, you may face a 10% to 15% penalty on the unpaid amount. Non-submission can even result in legal action under the Income Tax Act 1967. Staying on top of deadlines and filing accurately helps you avoid these costly consequences. Wrap up, remember that filing tax returns is mandatory for all taxable individuals and entities in Malaysia. Accurate declaration of your income, reliefs, and deductions ensures you pay the correct amount of tax. E-filing is highly encouraged for its efficiency, but manual filing is available if needed. Keep all supporting documents for at least 7 years, as you may need them for audits. Partnerships should report profit allocations, with each partner responsible for their own tax. Staying informed and organized makes tax season much easier.